Hey guys, welcome to our fourth dividend portfolio update. It's been about 5 weeks since the last update and our portfolio has actually dropped quite a bit. The value has gone down, but that does not necessarily mean it's a bad thing. Let me give you guys the full rundown in this month's dividend portfolio update. On this channel, I talk about all things finance, wealth building, and how you can achieve the life of your dreams through financial independence. If you want to join me on this journey to financial independence, go ahead and hit that subscribe button. Alright, first let's take a look at the portfolio's value change in the last 5 weeks. The portfolio is currently valued at $66,161, compared to last month's $74,318. That's an $8,200 or 11% drop in just 1 month. I'm gonna be honest, this looks pretty bad. Did I really take a giant loss? Is my portfolio burning down? Or did I make a terrible investment and now I'm losing it all? Well, not exactly. If you take a look at my dividend yield, it's actually gone up. The same goes for my annual dividends. It's gone up since last month as well. So what's going on? Well, my portfolio value did drop, but that's because of my portfolio getting leaner. Our dividend yield increased from 3.06% last month to 3.71% this month. Dividend yield is calculated by dividing my annual total dividend by the portfolio's value. Because the portfolio's value has gone down and my total annual income has increased, my portfolio's dividend yield went up. That's what I mean when I say my portfolio did not lose value, it just got leaner. It now pays me more money with less invested capital. My goal with this portfolio is to generate a livable income with as little cash required as possible. I am aiming for around an 8 to 9% dividend yield with this portfolio. So with $500,000 invested in this portfolio, it will generate roughly $40,000 per year. Last month, we saw a massive jump in our annual dividend because we were tracking it over a 6-week period. But this update is coming about a month after the last, so we would not see the same type of big jump. But for a month of work, we have only increased our annual dividend by under $200. And while that is a consequence of trimming down the portfolio, not everything we trimmed was fat. We did cut some dividend payers out as well, so our overall dividend increase took a hit. But I am still happy because this month we hit a 20% mark towards our goal of $12,000 per year in annual dividend income. Now let's look at our dividend and portfolio growth over time. I have only been tracking this for 4 months, but it still offers a great look at our portfolio progress over time. We just talked about why our portfolio value dropped this month, but I will show you all the specifics later on in the video. The goal is to have this portfolio break 6 figures by the end of the year, but it's looking like that's not going to happen. I can be hopeful, but we're going into the holiday season and I don't know what my budget will look like over the next 8 weeks. I will still invest at least $1,000 a week into this portfolio, so maybe we can see this portfolio break $75,000 again by the end of the year. We'll just have to wait and see what the next few paychecks look like. We can see that our monthly dividend went up by $20 in October. We don't have all of November's numbers yet, but I am hopeful that we'll be close to, if not more than $200. Make sure you subscribe so you're notified of when that passive income video drops later this month. And on the right, I added a new chart that tracks our annual dividend over time. We can see it's a slow and steady growth, but when you build a dividend income portfolio, you're giving yourself a pay raise every single time you buy a stock. I pretty much got a $1,000 annual raise in the last 4 months. When was the last time your employer gave you a raise? Would they give you a raise every single month? When you start down this long journey, you are investing for yourself. No one else will do it for you. The journey may seem daunting, but we all take it one step at a time. One day, you will look back and be thankful that you did. Alright, let me show you guys how I leaned down the portfolio this month. I had to purchase a lot of stocks because of my options trading, and AMC was one of those stocks. In one of the worst decisions of my investing career, I sold 200 shares of AMC at a $1,000 loss because of impatience and greed. If I had listened to my gut, this would have been a profitable trade because AMC proceeded to skyrocket the day after I made the trade. I sold to free up the cash, and the loss will be used for tax loss harvesting, but it feels terrible all the same. The next sale is the biggest factor in why our dividend portfolio value took a big dip. I had 43 shares of Apple stock that was part of the overall dividend portfolio. I bought an additional 57 shares last month, so I would have 100 shares to sell options contracts against the company. I just so happened to buy those shares right at the bottom of the October dip, and they proceeded to skyrocket. My contract expired and I sold all 100 shares of Apple for about $4,000 profit because I did earn a few $100s of premium for selling the contracts. The rest of the stocks I sold off from the portfolio were because I have owned them for quite some time and they were not doing anything for the portfolio, so I thought it was a good time to trim some fat and free up some cash. Overall, I made a profit of $3,053.70. The losses I took will all be used to offset the capital gains taxes that I will have to pay. Alright, now let me show you the purchases since the last portfolio update. I have been heads down focusing on buying my dividend paying stocks. I picked up 20 shares of SPYG, the main growth ETF for this portfolio, bringing the total in the portfolio up to 55 shares. Then, I picked up 27 shares of NUSI, bringing the total up to 68 shares in the portfolio. This stock is more expensive than RYLD and QYLD with a slightly lower dividend yield. That's why I'm buying it at a much slower rate. But I do need to build up a larger position so monthly dividends can purchase at least one share on its own. Next, I picked up 47 shares of RYLD to bring the position over 100 shares. This is my absolute favorite cover call ETF. I will focus more on buying this stock once I have built up my positions in QYLD and NUSI. Below that, I picked up 49 shares of QYLD, but I still don't have 100 shares of this stock yet. I am focusing on this one at NUSI over the next few weeks to get the position sizes up. After that, I rounded out my position in Horizon Technologies with 9 shares, bringing the total up to 160. I'm just letting this stock snowball on its own for now. If it ever drops back down to the $16 range, I might bolster the position with another 40 shares just to help the snowball a little bit. It is a very cheap stock that pays 10 cents per share per month. Below that, we can see a new addition to the portfolio. It is a quarterly paying stock and it's cheaper than Horizon Technologies with a slightly higher dividend yield as well. This is what I started buying when I stopped buying Horizon Technologies. This is part of my diversification effort for the portfolio. And lastly, I bought 1 share of this growth stock, Upstart, to see if I would like selling options against it, but it is way too volatile. So since the last portfolio update, I've spent $5,549.40 on stock and increased our annual dividend income by $403.39. If you guys don't want to have to wait a month for a portfolio update, make sure to join me every Friday when I release my Fire Fun Friday videos, where I walk through the markets for the week and all my purchases that I've made. Okay, let's take a dive into the dividend portfolio to see my top 7 income generating assets. DIV is still at the top and continues to snowball on its own. We have just over 400 shares and that number keeps increasing every single month without any active investment into it. This position generates over $400 annually. We can see that RYLD has surpassed SPHD and SRET to become my second highest income generating position. We have just over 100 shares and it's generating over $300 annually. Once I have about 400 shares in this stock, it will generate about $100 a month. I'm excited for that. Maybe it will surpass DIV and take the number 1 spot by next month. Below that, we have SPHD and SRET. They are both monthly payers, each generating over $200 annually. They both just snowball on their own as well. Right under those, we have QYLD. This position will grow quite quickly as it is one of my main focuses for the next few weeks. QYLD and RYLD will eventually become my largest income generators in this portfolio. And lastly, we have Horizon Technologies and NUSI. I expect NUSI to surpass Horizon Technologies by next month as well with my continued investment. I'm going to set a goal for next month's update. I want our dividend yield to be closer to 4% and our annual dividend income to surpass $2,700 annually. Will I hit this goal? I have no idea. But when it comes to goals, I always try to aim for the moon, and if we don't make it, at least we'll land on the clouds. And that's it for this month's dividend portfolio update. We are further away from our 6-figure portfolio goal, but that's okay. we're still making progress toward our overarching goal of $12,000 per year of annual dividend income. Thanks for checking out the video, and if you enjoyed it, please consider hitting that like and subscribe button. As always, thanks for watching, and I'll see you guys on the next one.